short term though, we are feeling the pain. And Manav Chopra now with us. He's Director Technical Analyst, Nuvama Institutional in our studios. Manav, great to have you here.
Thank you.
You know, and even as we're kicking off the festive season, it's not looking too festive out there.
True.
More pain in store.
Yes, I think, looking at the overall structure of the markets, we are in an intermediate correction of a larger bull phase. So there is, the short-term correction is what the markets have been used to overall. You see a quick 4-5% kind of a dip and market makes new highs. But, this time around, my sense is that we have already made an intermediate top. I think to our previous discussions, we were calling for some bit of an exhaustion in the mid cap, which has seen a reasonable amount of decline. Absence of any leadership in the frontline names, take most of the sectors. I don't see any of the sectors forming new highs in times to come. Barring few sectors like IT or maybe select names from financials. But largely the sector construct has really been dampened in last few weeks, along with the broader markets. So, you might see an odd trading bounce. The short-term sentiment has come to a near-term oversold levels. You might see an odd trading bounce. But my sense is that the broader construct would be similar to what we witnessed in October in 21-22, where you were grinding, forming a correctives rallies over the period of 3 to 4 months. Similar in the first, initial months of 23, where you did see a 3 to 4 months kind of a decline. I think this is what the market is going to see over the period of time, and any trading bounce might be led with some short squeeze formation, but largely the construct of the market has been on the intermediate correction zone, and that's my sense you'll be seeing in next few months.
Manav, the last time we spoke, which was maybe a week ago, you talked about a 10-15% correction in the broader markets.
Correct.
The mid-cap space is in a 10% correction. It's officially gone into a correction phase, like they call it, from its recent highs.
Right.
If you do anticipate some more pain, where will the pain come from? And I think just before this correction began, the argument always was, will it be a price correction? Will it be a time correction?
Right.
It seems like we've done a price correction, and now you're saying that there could be a time correction coming away. So give me a sense of what more. I mean, you buy in a correction phase, don't you? Or
yes.
start nibbling in that sense?
We do. So let me just give you a little bit of back end. So we have seen a rally of 6 quarters non-stop in the market. Let it be your broader markets or your frontline indices. And I haven't seen historically, even post-COVID, after 6 quarters is when you started getting into a corrective zone. So sentimentally, we were at the highs, and a pullback or a sideways traction with the price correction is going to create a platform for the next bull market. I mean, it's easier said than done now, but how do we navigate this intermediate correction is going to be challenging. If you look at the Nifty Infra Index, which constitutes of your cap good names, some of the cements, your power utilities, they have actually started to crack down. And when we see a sector like that also giving away, it calls for poor market breadth eventually, which will lead for some more laggards. So my sense is with small cap index, which has a very, very strong support at 17,800, 18,000, which has been, which is a neckline of an important head and shoulder pattern. Once that starts to give away, you might see more pain coming in. What is holding the frontline names is your heavyweight names like MCX, BSE, CDSL, Glenmark. In case if any of these capital market names starts to give away some profit booking, the frontline stocks which are holding the small and mid caps, that will create some more pain in the markets going forward. I think it happens on immediate or maybe after a few weeks. I think the time will decide, but we have been quite aggressively telling clients to trim their positions, at least in this mid, hide in the low beta. The navigation is going to be difficult, but we'll wait and watch how it goes.
So, Manav, you are not buying anything. What is it that you are comfortable selling after the pain that has already come about?
Sure. So, in the recent few weeks, the only sector which is reasonably at, near to highs, which are seeing fresh breakdowns, is your cap good names. Let it be your Siemens, ABBs, or even Cummins. This is a space which have started to form the first initial of a lower high. It's not yet breached its recent lows to form its a lower high, lower lows formation. I think the cap good names will start witnessing some more pain, at least, which could last for a few more months. This sector has been in a very, very strong uptrend of 5 years. So possibly a few months or maybe half a year of corrective decline very much there on cards. So this is one space where you will see some pain coming in along with these cement names and power utilities for that matter, has been doing a good amount of rally, which has been the savior in the public sector space, and any fresh breakdowns is definitely a thing that, we are quite cautious about.
Is there any opportunity at all to buy in the large cap space? Because they've been buying the brunt despite not witnessing the good times in so many ways, right? So any of the frontline names that you think may be showing early signs of adding. So your Infosys, Wipro, RIL, HUL, I mean, look at what happened to them on Friday.
Absolutely. I think one sectors which we are recommending clients to be in low beta or start nibbling longs, it has been IT for a while, but now the FMCG space have declined close to its 100-day, 200-day average. So we've seen historically in any tough times, FMCG index usually tries to form an early base around the 100-day, 200-day average. I'm not sure about the construct of whether to be aggressively buying HUL, but what we are recommending is names like VBL or names like Britannia. As the segment of FMCG, I think you might not see a V-shaped recovery, but some base formations, at least in these names, is where hiding is there. The insurance names are also kind of likely to be a bellwether in this scenario with some frontline private banks like ICICI. So that's the only space, nothing being very aggressive, because I think for the near term, you might see some better opportunities, at least at lower levels.
ICICI over HDFC and any of those larger NBFCs that you are finding tempting right now?
See, the NBFCs in such markets, where you see some bit of markets getting weakened in the broader space, NBFCs usually gets hit equally. Barring few names, but largely I think NBFC, the structure still remains quite weak. I haven't seen any bit of a recovery. There might be a short squeeze bounce, but not that I'm expecting a good, meaningful buy and hold kind of a scenario coming for the NBFC's name. So when we're looking at the financial Nifty chart in general, it's been quite range bound only because of some private banks holding the guns, but largely if the bank Nifty is in a range of say 5,500 to 52,500, and that has just been the savior from the private banks. So my sense is that the NBFCs would be an avoid, but certain private banks you might just want to have that place to hide in, nothing like a aggressive buy and hold.
Which are those apart from ICICI?
So at the moment it's ICICI and HDFC Bank, which looks fine, but the broader construct even in the other private names are on the weak foot.
What about an HUL, ITC, Tata Consumer? And I ask you this because ITC for the longest time has been called the Rahul Dravid of this market. I think people have changed their mind after what we've seen in the last 10, 12 days. Right. But not accumulating those names because they are defensive and they are supposed to be bought when the markets generally aren't feeling great, right?
I think a lot of rules of the markets have changed. We have seen where people would talk about hiding in a lot of the FMCG, but it's become very, very stock specific within the sector itself. I think the sentiment of the markets in even certain names have changed a lot. I'm not sure about HUL at the current juncture because it has actually violated key supports, but just nibbling into certain ideas in a phased manner is only what we would suggest. But in the pecking order for us, ITC is still an avoid name, and we would still want to be with names like Britannia or VBL for that matter.
What is the Nifty outlook?
Okay, so from a medium-term perspective, I'm not expecting Nifty to go beyond 25,000, 25,200. My sense is that yes, we have declined from the recent peak of 26,500 all the way to 24,000. This is the zone where the short-term sentiments are at the oversold levels. Let it be your breadth, let it be your short-term momentum, or even the sectors. They are at the short-term levels where you might see a short-term trading rally. But in the medium term, I think eventually the market would be grinding on the lower side. My medium term, long term, at least I anticipate that the right or an aggressive levels for the Nifty one to initiate for a medium to long term perspective is still wait, but a possibility of down towards 23,000, 23,200. And that's when we would want to go for more aggressive stance. But I think in times to come, you will be seeing those levels, not on the immediate basis, but in next few months.
And how much more on the Nifty in terms of downside, A, and B, I find it hard to believe that your trading desk is not calling clients right now. What are you calling clients and telling them? Because everyone wants to do something even in a falling market, right? So I know Neeraj asked you what you'd sell, but just build on that a little bit more. What are they doing? What is your team doing is what I want to know. You can't go quiet for sure.
Of course, I mean, that's on the sell side. We have to always be engaging clients, but the perspective is that, managing risk in this scenario is the key important thing. Not taking an aggressive bet is also one of the calls that we've taken recently of, shifting our stance from the high beta names or the mid caps getting into the low beta names. We are evaluating some stocks which are coming at key levels, at least on the sectoral front. That is only the part we are
negotiating. Which ones are those?
So, like I mentioned, it's
Britannia
from the
we've got,
insurance names. We like HDFC, ICICI, PruLife, iBank, and obviously within the IT, it's Tech Mahindra, Infosys is something that we are ready to navigate in this scenario. But given the stance, I think for short-term traders, we are recommending the few sectors which might see some bit of a short squeeze is going to come from the metals and real estate, but not something like we would want to buy and hold, at least in the near term.
Well, not doing anything is also doing something. So in that sense, it's worth it. Okay, great. Manav, good talking to you. Thanks so much for taking the time out. Really appreciate your time. And viewers, with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.